Exchange-traded fund stocks. One way for beginner investors to get started is to buy exchange-traded funds that track broad market indexes, such as the S&P 500. Exchange-traded funds have become one of the most popular investment vehicles for both institutional and individual investors. They are cheaper and far better than mutual funds. Exchange-traded funds offer low-cost diversification, trading, and arbitrage options for investors. Exchange-traded funds can be an excellent entry point into the stock market for new investors because a single fund holds a diversified collection of investments. Perhaps best of all, these aren't complicated financial products. While exchange-traded funds do offer very convenient and affordable exposure to a huge range of markets and investment categories, they are also increasingly blamed as sources of additional volatility in the markets. This criticism is unlikely to slow their growth considerably, though, and it seems probable that the importance and influence of these instruments is only going to grow in the coming years. An exchange-traded fund is a type of investment fund and exchange-traded product. They are traded on stock exchanges. Most exchange-traded funds are index funds. That is, they hold the same securities in the same proportions as a certain stock market index or bond market index. An exchange-traded fund don't often have large fees that are associated with some mutual funds. But because exchange-traded funds are traded like stocks, you typically pay a commission to buy and sell them. Do exchange-traded funds pay dividends? If a stock is held in an exchange-traded fund and that stock pays a dividend, then so does the exchange-traded fund. While some exchange-traded funds pay dividends as soon as they are received from each company that is held in the fund, most distribute dividends quarterly. Most exchange-traded funds are actually fairly safe because the majority are index funds. Over time, indexes are most likely to gain value, so the exchange-traded funds that track them are as well. Because indexed exchange-traded funds track specific indexes, they only buy and sell stocks when the underlying indexes add or remove them. The two ways that exchange-traded funds make money are through capital gains and dividend payments. Share price may increase or decrease over time, or you may receive a cash payment. Investors make more money depending on the amount of money invested through compounding returns. Exchange-traded funds offer advantages over stocks in two situations. First, when the return from stocks in the sector has a narrow dispersion around the mean, an exchange-traded fund might be the best choice. Second, If you are unable to gain an advantage through knowledge of the company, an exchange-traded fund is your best choice. Experts advise owning anywhere between 6 and 9 exchange-traded funds if you hope to create even greater diversification across numerous exchange-traded funds. Any more may have adverse financial effects. Once you begin investing in exchange-traded fund, much of the process is out of your hands. In doing so, you're investing in some of the largest companies in the country, with the goal of long-term returns. Other factors to consider include risk and the fund's expense ratio, which is the amount you'll pay in fees every year to own the fund. The lower the expense ratio, the less it will eat into your returns. An expense ratio is a fee that investors are charged by an exchange-traded fund. This fee covers the costs associated with administration, portfolio management, marketing, and more. These fees are usually percentage-based and represent an investor's annual cost. An expense ratio is an annual fee charged to investors who own exchange-traded funds. High expense ratios can drastically reduce your potential returns over the long term, making it imperative for long-term investors to select mutual funds and exchange-traded fund with reasonable expense ratios. A good expense ratio, from the investor's viewpoint, is around 0.5% to 0.75% for an actively managed portfolio. A good rule of thumb is anything under 0.2% is considered a low fee, range from as little as 0.03% to about 1%. The lowest cost exchange-traded fund usually have lower expense ratios. An expense ratio greater than 1%, 1.5% is considered high, according to many experts. The higher the expense ratio, the more it'll eat into your returns. Before investing, check the fees. One of the most important factors that affect the expense ratio of a fund is whether it's actively or passively managed. Let me explain this statement. The expense ratio an investor pays for a fund is separate from any commission or transaction fees. Represent one-time costs when you are buying and selling of foreign stocks, but the expense ratio applies each year on exchange-traded fund, ETF, stocks. There's a 30% charge for non-US citizens on dividend-paid stocks, all foreign stocks. Commission or transaction fees for Trove, Chaka, and Chipper Cash are 1% fee on buying and selling of foreign stocks, all foreign stocks. Commission or transaction fees for Bamboo is 1.5% fee on buying and selling of foreign stocks, all foreign stocks. So, it's better to use a stock app with less fee on buying and selling of foreign stocks, all foreign stocks.
Okay, now I want you to take a look at this picture where you see so many. You have about four, five, more than five, 14, 1, 2, 3, 4, 5, 6, 6 tables, 6 lines. Now you see the check symbol, price, number of shares, order type, commission, fund source. You need to understand this. It's a very big important. As you're looking at it, just memorize yourself with everything you're seeing. It's also applicable to non individual stocks and retail stocks, REIT stocks, that is real estate also. We all have the same thing in common. So you need to understand this picture very well. These are the most common ETFs that people for beginners. ETF example, 10 of the best ETF for beginners. So as a beginner, you need to have these stocks. Not all of them. You need to select them, the one you need. They are good ETFs. Also look at this. Here are the lowest cost ETF for fall 2021. Read more below to for each of the ETFs description. Now these are the ETFs at your left hand side. These are the symbols. These are the expense ratio, and these are year 1 year performance. That is why if you are buying look for an ETF, what you need to know, you need to find out the top 10 holders for that ETF one. Then you need to look at the performance for the past years, 1 year, 2 years, 3 years, 5 years, 10 years. You need to know them, you need to note them, you need to understand them. Now look at people are going for VOO, which is the Vanguard. Vanguard is another best way. I will take the website, I will show you all the ETFs on Vanguard and also some ETF websites that you need to know. Now, Vanguard uses expense ratio 0.03%. Yearly performance, that is return on performance, 33.48. There are other ones that did far more better than it. Look at this one. Share called S&P total US stock market. It did 34.69%. So this thing you need to understand. Look at the bottom one. This one did 34.80. The upper one, JP Morgan, did 33.82. ETF is all about research. It's all about knowing the holders, trying to understand the holders. Who are the holders? That is the most important thing. Not just you don't go and buy ETF because people are buying ETF. You just go and buy ETF. No. Expense ratio is another thing people don't know. Once you buy, if you eat into your expense ratio, you end up even losing or not even investing. That's why you need to watch out for fees they charge on buying and selling your stock, and also the expense ratio. If you are buying ETFs, you need to know all these things. These are information you need to find out, you need to know before buying any ETF. Take your time to look at the ETFs. There are a lot of them, a lot of them that are very, very good. The people are not even aware of them. So, so don't take you to the ETF website where normally I normally do some check, find out. So start with Vanguard first. Vanguard, because it's one of the best. This is our website. This is our website here. So you want just to type this. Then you go to search for the ETFs. Look at them. So we see Smash ETF. Look at them. These are different agents. Now what you need to know, ETFs are on different sectors, not on particular sectors. Different sectors. They cover a wider range of different sectors in the industry, stock industry. That's why first you need to understand what is stock. You need to understand the types of stock. You need to understand the sectors of stock. And if, for example, you don't have any understanding, basic understanding of types of stock, what is stock, types of stock, types of stocks, sectors of stocks, the best way to start is from ETF. And the best way you can start ETF is from VOO. But now, my Vanguard website now, this is most times I come here to check on the Vanguard ETFs that I want to buy, and I search to know more about them. Like it's not hard. You just click, when you click on this, it take you to the particular ETF. So you see the record and everything about the ETF. It's traveling and agency ETF, investment guide, investment, investment grade. Look at it. As you can see, tip, asset class, what it covered, expense ratio, look at it. See, look at expense ratio. See, these are low. Price, change, yearly performance, return, 1 year, 5 year, 10 years. So you need to know all these things. Not because people are buying ETF, you want to buy ETF. You end up in a big shit. This is the one that people buy for common. They go for this. See 1 year return. See how much she has made, 21, 5 years, 6, 10 years. So these are the things you need to look out for. This is from Vanguard. If you want to know more about this step, you can just click on it on your own. You come out to pop up a lot of information that you need to know. They are all here for you. See, this is from Vanguard ETF. There are a lot of them, a lot of them, a lot of them. This is one. Okay. This is another one. ETF.com. These are information you need. Sometimes you just take your time, go through them. Those are data. Just take your time, go through them. This is the website. Stop eating performance. Network is very slow here. Take your time to go through them. Here's another side, another website, justetf.com. Also another website for ETF. Say good ETF, a lot of different kinds of ETF, different kinds of ETF. But you need to know why you are buying that ETF, why you invest in that ETF, so that's why you need to do a lot of research. You need to know everything. Like the previous video, the previous video presentation, you need to know expense ratio, performance, orders of that ETF, and that ETF, a lot of information, performance, yearly performance, 1 year performance. 2 year performance, 5 years performance, 10 years performance. You need to know this is another one, etfdp.com. These are ETF websites that you can use to find that information. So it's a popular ETF, blockchain, BSD, semiconductor. See them for yourself. Everything they need to know about ETF. The oil, bone, water, all of them. They will help you to they will help you navigate the ETF you want to buy, but still up to you to find out what you really need that will suit your portfolio, that will suit your investment. This is another one. ETF trending from popular webcam, ETF channel, experts, video. This is another website of ETF too. And go through there, take your time. Everything's all about timing. Take your time to go. You put your money where you want to put your money. You need to know what is happening in the market. You need to know what is happening in the market. This is another one again. So it's your plan. Take your time for long, short, small, high bond, large growth, large value, real estate, middle cap, all of them. Take your time to click all of them. Like I told you, ETF is not just one ETF. ETF is wide, it's broad. It covers a lot of sectors, different sectors and different ETF. So once you want to do that, you need to know what sectors you are going for. The targets, your targets, you need to know. Return for the ETFs, other ETFs. That's what you need to know. This is you need to know. This. Thank you for watching. Subscribe and like, follow this channel for more updates on investment, savings, lifestyle, and inspirational messages.